Hello and welcome to another update video on Polygon. So here on the Polygon chart, we can see that the market is trying to move to the upside here slowly from the support area. There was a reaction to standard support, which is located still between 16.1 and 19 cents, basically the support zone in which we've seen a reaction, and where we have seen quite a strong rally actually, but it's a bit messy, so I'm not entirely sure about the nanostructure. I'm not sure how stable it is. It doesn't look particularly stable to me, to be honest, this move to the upside, so please be aware of that. I'm not convinced that this is in any way a substantial or decisive breakout to the upside or any strong rally unfolding here. It does look more like a let's say quite messy, maybe overlapping, maybe diagonal structure that might be unfolding there. Certainly nothing that would be in any way convincingly bullish, but we can continue to focus on higher slowly, carefully, cautiously, because the market has started to go up in general. And also here we can see a nice reaction to Fibonacci support, and we had a 5-wave move up from the April low, so this can be classed as wave 1 or wave A. The pullback was a wave 2 or wave B. I would rather focus on the orange count, which is the not so bullish count, because the pullback was very deep and the initial move up was a bit messy as well, but still, it was technically a valid 5-wave move up and a 3-wave move down. So now the question is, where could the journey go to? What could be the next target? And to be honest, I'm tracking next here this move to the upside into the blue zone, into this blue target zone, you could say, between 30.6 cents and 44.8 cents. This is an ideal zone that we are tracking, an ideal target zone, because normally such a C wave to the upside, I mean, if we assume a B wave bottomed here, down there, around the 22nd, 23rd, then the C wave to the upside should ideally reach standard Fibonacci projections. In this case, it would be the area between the 100% Fib extension at 30.6 cents and the 161.8 extension at 44.8 cents. So that's just a standard target zone there that we are tracking. And just an ideal, it's just an ideal target area basically to watch for. Any higher than that could still be a C wave as long as it's really only a 3-wave move, but technically above that zone, it will become more probable that we're actually dealing with a more bullish scenario, but we would still need all 5 waves that you can see there in the white scenario, all 5 waves, to basically confirm that we are possibly even going into a long-term uptrend or a medium-term uptrend. After these 5 waves then, we have some clarity and we should see the next pullback hold a higher low. Basically the same way what happened here in small, with this pullback from the May high into the June low. We had a reaction, right? Because we had a 5-wave move up. So it held a higher low. The question is just, is it really holding it? For now, it looks like that. And next target should be clear. Obviously, what shouldn't happen now is a break below the June low. I mean, if that happens, I have to assume we failed an upside reversal, which wouldn't be a massive surprise given that, the MATIC chart, or Polygon chart, it's rather a weak one. In the last video, I shared with you the larger time frame as well. Don't think I need to do that today. Should be clear. If not, then check out the last video. But the situation is pretty much unchanged. Just wanted to repeat again the key levels. I know some of you are very interested in Polygon, if anything changed. Not as far as I can see, but if there are any structural changes, I will, of course, let you know. So that's the update on Polygon. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.